Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it should be relied upon as any form of advice at all. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice. It is just general in nature only. The escalation that's going on in the dollar probably needs us to review. I've been incredibly positive on it for the last 6 weeks and for good and justified reasons. We know the Fed is going to start tapering in November. We also know that their overall response to COVID has been probably stronger than most other developed nations. And it has that drive towards it. That real push has been there for the US dollar. However, we got last week to a 12-month high, which is nice to see. We saw, and this is in Dixie, we saw it go through about 94.5. It got even as high as 94.7 at one point, which is a good thing to see, but the real level was there. Has eased off. And we need to ask the question why. Not only that, is the momentum that's been currently in there losing a bit of steam, and I would argue that it possibly is, and it's down to its biggest pair, which is the euro, and I'll come to that in a minute. But why I say that is that there needs to be something now that really can push it further, because that 12-month high is good to see. Didn't do it in March, and it tried again in July and also August, and failed every time. So getting through is a good thing. But again, there now needs to be another real push to really drive it home and to see it go further. So let's look at euro dollar, because that's where I think the momentum change is just starting to take effect. It's got down to 115, and that makes complete sense, as we've discussed in the US dollar playbook, having a look at the Fed and what the Fed is doing. All that made sense, and it's gone from about 118 all the way down to 115. That's an 18-month low. And again, the question has to be asked, what drives it towards 112? You're having a look now where US GDP has started to slow down. Have a look at the Atlanta Fed numbers. They've gone from about 5% GDP on an annualized basis down to 1.5. That's quite a slowdown. You've also got the Europeans who are still stimulating themselves really hard, and really hard indeed. And the ECB confirmed that with their new sort of programs that are basically there to, fix over the ones that have just been with regards to COVID. The central governments in most of the 27 member states are also trying to really drive home that COVID recovery. So in the next 3 to 6 months, it's probable that that growth differential starts to play out, and the euro dollar low end at 115 probably starts pushing back up towards maybe even as high as 120. Longer term, and the caveat here is that still it's a US dollar play that's heavily weighted towards the USD. The Fed is clearly still very much in play, and the overall picture is stronger. But I just can't see it getting to 112 without some form of major event. And I think that needs to be the next part of this question, is why I'm reevaluating my position, and maybe euro dollar is the one that we walk away from. What I haven't walked away from, and what I'm still pretty strong on, is dollar yen. Dollar yen is playing out exactly as we would expect. It still has an incredibly strong correlation, and it's inverse at that, between US real yields. And that is very clear that that's still strong. Every time we have this kind of scenario, the yen uses about 1.1% per month. And therefore, it's knocking on the door of 112 again. There's every reason you can make an argument that by probably March to April next year, it's at 114. And if we continue to see this trend, it could even be as much as 115 in June next year. So they're the revaluations of where we are. I'm still very much on the US dollar story, but I do think we need to back away from the look at the euro and back and hold on to what we're doing with dollar yen.